Hi there. Let's talk about 10 places you can invest your money in Kenya for you to be able to build wealth. You don't need to have insane amounts of money like millions for you to build wealth. You can start with the amount of money you have, whether it is 1,000, 10,000, 50,000, you name it. The key is to start, develop the discipline, be consistent, and your money is going to grow. My name is Afagza Sifunam. In case you are new here, kindly consider subscribing to this channel, and also I will still add it, drop a like on this video. The very first place you can invest in is investing in yourself. This might sound like a cliche, but the reality is that you investing in yourself is the biggest investment you can do. People think they need to source investments out there. No, you are yourself's biggest asset. So invest in yourself and see your money grow. Case in point, if you have 20K, for example, that 20K, one person goes and enjoys it, basically drinks, gets entertained, etc. Another person invests it in learning a given course, maybe sales training, maybe public speaking, maybe gaining knowledge on financial literacy. The person who invests in learning a skill is most likely going to be able to get a bigger reward in the midterm to long term. Then the second place you need to invest to is money market funds. Just start. The amazing thing about MMFs is that they allow you to invest even low amounts of money. And we have a plethora of MMF funds in the country. Choose whichever. I won't say you need to choose a specific one. The key is for you to start. And by the way, MMFs are good because their advantages are they are low risk. You have daily interest. You can withdraw your money within a few days. This is better than leaving your money in a savings account. And just to give you an example, suppose James, for example, saves 20,000 each and every month. Instead of leaving it in his bank account, he can put the money in an MMF, okay? Which is basically fund managers out there pulling money together and investing in short-term financial instruments. With that, they'll be able to enjoy daily interest and also access this money if they need to. Then the eighth place you can invest in is treasury bills and treasury bonds. You know, this is one of the safest investments ever because you lend money to government. T-bills are normally short-term, maybe 91 days, 182 days, 300 and some days. Treasury bonds are normally long-term, normally over 2 years. The amazing thing about investing in government securities is that they are predictable. They are government-backed, meaning the default risk is very low. And they are suitable for conservative investors who want guarantee that they're going to get their money back, even if they get something small upfront, which is predetermined, not upfront, it's predetermined, which they're sure they're going to get. Okay? And then the seventh place is SACCO shares and deposits. Many wealthy Kenyans quietly build wealth through SACCOs. Why? Because SACCOs offer some key advantages. For example, annual dividends, which is a big benefit, interest on deposits, affordable loans, and long-term wealth building. Let's look at a practical example. Two friends, okay, save 10,000 shillings each and every month. One keeps their money in a bank account. The other contributes consistently to a given SACCO. 10 years later, the SACCO member has earned dividends and qualifies for larger loans, which have attractive rates compared to the person who was saving their money in a bank, a commercial bank, like any other person out there. And then the sixth place you can invest is dividend stocks at the Nairobi Securities Exchange. I'm really excited because this is my favorite. You know, we have companies which have a long history of paying shareholders dividends, okay? And a good number of companies at NSE are mature companies, meaning they do partake in sharing of their profits with their shareholders through dividends, whether it is interim or final dividends. And this is an amazing thing because unlike stock, which stocks fluctuate, you invest money in dividends and you enjoy dividends annually, okay? And then the fifth place you can invest your money in is ETFs and international investments. You see, many investors now are buying international ETFs. Instead of betting on one company, you are buying hundreds of companies at once. Think about the possibilities globally. For example, the global technology companies, healthcare, manufacturing, consumer companies, all these are companies in sectors which are diversified out there. And you can invest even in a company based in America, based in Japan, while in Kenya. And then the fourth place where you can invest is real estate investment trusts. You want exposure to real estate, without buying land, without buying apartments, maybe because you don't have huge amount of money. That's exactly what REITs are for. You invest in professionally managed property portfolios, and the amazing thing, even NSC appreciates that. The benefits of this that you require low capital, potential rental income distribution, you're bound to enjoy that because of the REITs, diversification, and it's real estate without dealing with tenants or maintenance. That hassle is not there, yet you are partaking in the cake in real estate. And then the third investment area you can jump onto is starting a small business. The best investment isn't buying assets, it is creating one. And I'm saying so because by you creating one, you have the potential of ensuring it grows. And if it grows very big, you can be able to realize better returns than even you buying an asset out there, which is owned by someone else. That is why you think of business, whether it's agribusiness, car wash, printing, digital agency, content creation, whichever area out there, I won't confine you. The key is to start. Learn how to run a business. And if you're passionate about a given area and you do most of the things right about a business, chances are you're going to be able to make an income. You're going to be able to see your business growing. Instead of, for example, pursuing 10%, 15%, maybe even government securities or even through the dividend stocks, you could be able to see your money grow over time in a way that you have full control and you are steering that particular growth. And then number 2 is rental property. But then again, I have a caveat to it. Only invest in this if you are ready. By ready, I mean you already have the base financial foundation, not really getting big loans and then putting that in rentals, because there are so many nuances when it comes to construction. There are so many cost drivers, cost change, material change. And even in case you lack capital, you're going to trap your money in assets, yes, but you're going to be cash flow poor. That is why you can jump on rentals if you are ready for you to be able to skyrocket your earnings. And then at number 1 is diversified investment portfolio. Basically put, you invest in whatever thing you want to invest out there, just employ diversification. You can say, for example, you put in 20% on MMFs, 20% on Treasury bonds, 20% on Kenyan stocks, 10% SACCO, 10% cash or business, 20% ETFs, you name it. Distribute. By distributing your money across different assets, you're going to be lessening your risk. That's the essence of a portfolio. You build a solidified portfolio, a good portfolio. Yes, your earnings might be impacted because some assets will do very well, others will stagnate, others might hit the negative, but a good constituted portfolio is going to ensure you have a positive return at the end of the year. That is why you investing in a portfolio is going to assist you, and whether it is income, rental income, and interest, in case you go, for example, for bonds or even government securities, get coupon, You enjoy dividends in case you put your money down in the stock market. Basically put, diversify your investment. And of course, as I've said, the most important thing is to start small. Start with what you have. Be consistent. Reinvest your earnings to enjoy the power of compounding. And most importantly, don't fall for get-quick schemes. Wealth is never built that quickly using get-quick schemes. Wealth is built slow but sure, bit by bit. It is better to have your money in a given investment area where you are earning 10% per year, which you are sure you're going to earn that 10% per year, as opposed to someone lying to you, for example, bring your money, I put it somewhere, you're going to earn 40% per week, and then you lose your entire money or your entire investment. Better put on a 10% per annum. In case, for example, you enjoy capital appreciation, fair enough. If you are enjoying dividends or interest, that's amazing. The key is to plow back your returns, whether dividends, whether interest, and then capitalize on compounding for you to be able to skyrocket your wealth through investment. Guys, what do you think about these 10 places you can invest your money in Kenya and be able to see your money grow? I want to hear your thoughts. Comment down below in the comment section. Let us continue discussing. Cheers, guys, and y'all stay safe.